Hi guys, welcome back to another video. In today's video, we'll be talking about a client query that I had actually. One of you guys from the portfolio analysis workshop, right, had emailed me this question. As you know, if you guys have purchased any workshops, right, and if you have any queries, feel free to reach out to me via DM or email. Actually, only reach out to me via DM because it's easier to respond via voicemails, because I can't text so much. It takes a lot of time, and I also do not like texting or typing for that matter. So feel free to reach out to me via the Twitter DM and I will send you a voicemail. But this person had got the portfolio analysis workshop, right? And as you know, in that workshop we had explained about how to allocate towards a portfolio, how to build a portfolio, and we also showed like a model of both mine and Rajuchi's portfolio and what was the buying or the selling strategy we used over there, right? And this person had picked up from that PGL ka, that slide where we discussed about PGL. Again, as you all know, PGL used to be one of my holdings over there, and he had a very interesting question. He had two questions actually. One was particularly towards PGL, asking why was I so aggressive in terms of cutting? Okay, was there any bias over here? Is that the reason? Was there any sort of bias involved? And maybe that's why did I cut so aggressively in terms of PGL? And the second question, we'll get to the second question later. But anyways, now talking about, I would say the bias is a very interesting word over here, because think about it, right? Whenever, let's say, a stock has made money for me, like let's say for example, let's take your example only, right? Think about any stock that has made money for you, XYZ. In my case, let's say it's PGL, right? And let's say it's been a multi-bagger. It has proved your thesis, right? It's been a great journey and everything, right? Now think about it. Every single time when that stock has made so much money for you would be reluctant. If anything, forget about bias in terms of selling. It would be quite contrary to that. Now you would be, you do not want to sell that stock. Your bias plays in the opposite way, where you're finding reasons to hold that stock, not to sell the stock over here. Okay, so it is a similar case over here, right? I don't think there was any bias over here in terms of selling. In fact, I had to fight my bias over here in order to sell, because my mind will always tell me कि like अरे इसने तो इतना अच्छा पैसा बनाया, क्यों उसको बेच रही हो, right? So if anything, I had to fight the bias in order to not hold that stock. Okay, and I think this is a very very hard thing to do in the market. Okay, and I think this is because we how do I put this, we also exhibit, see, I'll tell you one thing, we exhibit the same behavior in terms of market as well as in terms of life also. Let's say in life, you've been dating a person for 4-5 years, okay, and it doesn't work out, all the time. Instead of leaving that person, whatever the reason could be, you're always finding reasons to to hold on to that person. One of the common reason is what, you spend 4 years with them, you spend 5 years with them. Similarly over here, when it comes to the stock also, what do you think? Array, I've had like a like an 18 months, 20 months of journey with a particular stock. I have put so much effort, it has made so much money for me. So you have all these biases that comes, which is reluctant, which makes you reluctant in order to sell a stock, and not it makes you very reluctant. So if anything, I would say the bias is in terms of buying and holding, and you have to fight that bias in order to sell. So constantly, instead of finding biases, you have to fight your biases, and you have to ask yourself the reasons, why should I not sell the stock? That is how your mindset should be. So that is one. The second question, he had again a very interesting question. Like after looking at my portfolio, he saw there are more than 20-25 stocks that are there in my portfolio, and why do I have so many stocks? Like why do I have this approach, right? And which portfolio is better, whether it is concentrated or diversified portfolio, and why isn't this diversified portfolio killing my returns, was one of his questions. So here is the thing. First of all, when you talk about a concentrated or a diversified portfolio, one thing over here is it is a very subjective decision. Okay, because I believe if you have a smaller portfolio, like let's say if you have a very small portfolio, then you make a concentrated bet, right? You play 2 to 3 names. But let's say if you have a big money involved over here, right, you have a huge network involved, then it becomes very difficult for you to play a concentrated portfolio at the end of the day. It's too much risk. Okay, that is one thing. So again, I would say that it is a very subjective decision. The second reason over here, when you talk about concentrated and diversified, diversification becomes an enemy. It becomes evil over here when, let's say, if I have 25 names, out of that 25 names, or let's say for calculation purposes I have 20 names, out of that 10 names are doing well and 10 names are doing shit, right? Then it becomes a problem. Let's say for example, I have some growth, a company that is growing at 40%, okay, and have a company B over here जिसका growth rate है 5%. So effectively मेरा overall portfolio को growth rate तो कम हो गया ना. But let's say if I have two companies, दोनों का जो है, company A company B, company C, company D, everybody's growth rate is 40-50%, right? Everything is a high growth engine. So my overall portfolio growth rate is not coming down. So it is not a bad thing to have a diversified portfolio, as long as every single company in that portfolio is a high growth engine. Yeah, because of, or more than high growth engine, I would say, where one company, let's say company A, is not getting the entire portfolio growth rate down. So that is another thing over here to look out for, right? So that the problem would be what, let's say you are having a high growth engine, like let's say in the past you had PGL, and along with PGL you had ITC. Instead of that, you would put all your money in PGL, rather than having something like a 5% ITC, which is not giving you any sort of growth engine. This becomes a problem. The third thing over here is, again, why you would have a diversified portfolio. Another thing is, see, at the end of the day, when you are in the market, you are someone who is on the outside. You are sitting on the lines, okay? And think about it as a polo race, jo horse mein jo race hota hai, you put a bet, right, on that money. You are that people who are standing on that, on that podium, and you're looking at that horse, and you are betting that money, on that horse, which horse is going to win. Okay, now there are, let's say, 10 horses. How do you know which horse is going to win? Everybody has a potential. Let's say everybody is telling, bhai, मैं तो 30%, मैं 40%, मैं 50%. Everybody is telling in that, the horse में जो है, जो polo bet है, everybody is telling, हाँ, I will win the race, I will win the race. But do you really know who's going to win the race ultimately? No, right? You do not know. So I don't think also it is right कि like, you take one player. Let's say you take, let's say there are 8 horses, and you put your bet on, horse number 1, and you put all your money over there, and probably horse number 7 wins. So let's say if I put money on all the horses over here. Now again, what is the condition over here? I'm not putting, money like a Tom, Dick and Harry, sub company mein. Nahin. The condition is all the 8 horses must be a high growth engine, which means what? All the 8 horses are, very strong, khata pita, horses are there. Not, like very thin, weak ass piece of shit. Not like that, okay? So what will happen at that time? If I put my money in all the, let's say in all the 20 companies that are there, it has a chance of winning. It is not a winner, it has a chance of winning, right? I do not know, because who is winning or who is not. And ultimately, as the season goes, as the time goes, as the quarter goes, I see that there will be probably like 8 to 10 names that are doing really well, and I will continue to reward it, and increase my allocation over there. And at the same time, there will be a couple of people who wouldn't do really well, and I would take my money out of them and continue to put it to the winners itself. Okay, so this is a reason why you have why you have a diversified portfolio. And the fourth reason I will also tell you is because I read a lot, right? As you can see, if you see on Twitter, if you see on YouTube, you see I track a plethora of companies, not like 1 or 2 companies. I track and if you have been in the portfolio analysis workshop, you would have also seen my tracking list, right? In fact, the tracking list is available in the recordings also. You see there are like 500-600 companies in that list, around say. Now think about it. If I'm reading so much, I have so much opportunities now ultimately, and I would want to put my money everywhere, but unfortunately also I can't. So I want to maximize the places where I want to put my money also at the end of the day, right? So I would say people who are in terms of concentration, I will tell you, I would say there are a couple of things. One is, people don't have a huge money over here to bet themselves for. And the second is, I don't think you read enough, because when you read enough, you have so much opportunity ki like, bhai, it's like opportunity hai, paisa nahi. It becomes that kind of a situation, not ulta. So it becomes very hard at that time to have a concentrated portfolio in that case. But most importantly, I'll tell you the entire thing over here when it comes to the diversified portfolio at the end of the day is because as long as, like I'm telling you, if you have 20 names, you have 30 names, as long as the overall growth rate of the portfolio is not coming down, right? You have everybody, high growth engines. You're not having 125%, 1.5%, 1.15%, you don't have that kind of a portfolio. It is all well and good. The problem happens, diversified portfolio only becomes a terrible thing, like I told you, when you have some high growth engine and then you have something like ITC and HUL, which is overall literally, ultimately they end up killing your return. So that's that. So I think this is I did this video also because I think a lot of y'all maybe there are some people who will also have the same kind of queries, who might also have the same kind of doubts. That is why I did this. I did this video. Also, another update, as you know, if you guys have been on Twitter, I literally posted a couple of days ago telling we will do a lot of live workshop, and we will do live workshop every Wednesdays and Sundays. But many of you again messaged me telling like Wednesdays is not possible for many of you. If I could push it to Friday, as most people will be getting off work on Wednesdays. It is the middle of the week, and you all don't know, at times you could be stuck in traffic or so as a result we have pushed that live workshop to Friday. We will do it via Google Meet only. By tomorrow I will share the link on my Twitter, and and also on YouTube also I'll share the link. Anybody can come, anybody can join. It's absolutely free, obviously. The only catch over here is, since it is being done on Google Meet, there is a limit as to how many people can attend, attend the live workshop. And you guys can come. It will be on a first come first serve basis. There is no like any list or so. Whoever comes first, they will be able to get the seat over here. So that is that. And we will discuss about in the Friday's workshop, we will discuss about Bayes theorem, the conditioning probability, and how it actually works and impacts over here in the market, and how conditioning probability or a Bayes theorem affects our decision making process. It will be a very very fun a fun thing. We will discuss about it for like 30 minutes or so, and then the next we will do it for like, I would say, 1.5 hours or so. And we will and you guys can later ask us queries, ask us anything you want. It will be a very very fun live workshop again. Anybody can come and attend. Just make sure like it again, it's like a first come first serve basis. I will float the link tomorrow of that meeting. So that's that, guys, about today's video. See you tomorrow. Bye.